Well, hello everyone. Welcome back to our performance snapshot for October 2024 for the HFRI. With us now is Ken Hines, president of HFR Index. Welcome, Ken.
Thanks for having me on.
So, why don't we start with looking at the overall trends in the hedge fund industry? Walk us through what's been happening in the first 3 quarters of the year, Ken.
Yeah, absolutely. It's been a good year in terms of total industry growth and inflows of capital. And it seems like we've seen that accelerate even in the last quarter, where we've seen some significant growth. You can see from this chart, after a dip in 2020 and 2021, you can see that the asset growth has been pretty steady, slower growth in the first half of the year. And then you see a bit of a jump there as the assets rose to an all-time record high. So coming into the end of the year, the industry is large of a total global capital base as it's ever been, which is very exciting.
And you mentioned asset flows. How does that look year to date?
Yeah, you can see here that the flows after a couple of years, when you take consideration 2021, probably not surprising in response to a lot of flight to quality and pulling back from a lot of different things. That was a pretty negative year in terms of flows. That really normalized in 2023. And then you can see thus far for the year, I think it says $23 billion of new capital inflow. And that's really been sort of backloaded into the third quarter. So I think going into the end of the year, we have high expectations for industry growth.
So moving on to looking at our composite indices for the month of October, how has performance been?
Yeah, October was really a buildup of exciting buildup to the U.S. election. Overall, even though there seems like a lot of market action both ways, interest rates rose pretty significantly, bond yields rose, and equities were actually slightly lower, even though there was a tremendous amount of back and forth because it was peak earnings season. So there's a wide disparity in terms of the actual earnings, and the response that the market had to the earnings was pretty powerful. But certainly in the last week heading into the election, all the focus has really been on the election, interest rate policy, monetary policy, fiscal policy, tax policy, all those things, and how that's going to shape the next year. And so you can see in the month, overall, the composite declined about 70 basis points, which you can see here. So a small decline there. Strategy-wise, fixed income-based relative value arbitrage is actually with a leading area of performance, which is kind of interesting in that interest rates rose significantly for the month. So clearly you're seeing those strategies were closely hedged, and you're seeing gains from other areas such as convertible arbitrage and other areas within the relative value space where hedge trades can do well, even when, and which are they're hedged to interest rates going up. And so even when interest rates go up, they don't see a significant decline. Very basically narrow performance for event driven, which again, a lot of expectations for event driven looking into 2025, especially with the results of the election now known. There's a tremendous amount of enthusiasm for M&A and for corporate transactions in sort of a deregulated environment, really being very business friendly. That said, in October, the HFR 500 event driven really kind of flattish, down 10 basis points, so not much of a net change there. You can see here, equity hedge, kind of a similar story to event driven, about 70 basis point decline, so not that much different than the overall index. And then overall, you can see here that U.S. equities down about 1.33%. So again, kind of a waiting game in the month of October, especially towards the end of it when all the focus was on what's going to happen with the political election. And then the one negative area was macro. Again, that's interesting. It's kind of a reversal from what we saw in September. In September, interest rates fell and macro gained, and the opposite happened in October. So you can see here, macro declined about 2% for the month.
So I guess we're going to see the same sort of waiting game at the sub-strategy level?
Yeah, a little bit more dispersion. As you know, the sub-strategies are a little bit more specialized. You got smaller groups, so you can probably tease out some more interesting performance dynamics when you think about that. The leading area credit arbitrage, which again is similar to, it's the event-driven strategy is probably most similar to relative value, where you've got long and short credit trades on. That's actually an area that gained about 3.4% for the month. Also, you saw strong performance in equity market neutral, which, as you know, is a mean reverting, factor-based, quantitative, relatively low vol strategy that's really predicated on, this strategy does well when you see major dislocations and performance of equities diverge from all their historical means, and then as they converge, that's when market neutral usually does well. So you see there a little bit better than 2% gain there. You also saw fixed income asset backed, and obviously this is very sensitive to how lending rates across banking, across mortgage, all those things kind of get rolled into this. So you can see a gain there of about 1.5%, 1.3 for the volatility index, which is something where has a certain similarity to the macro strategies. It's kind of CTA-like, but it's also funds that are trading options and volatility as an asset class. So you saw a gain there of about 1.3%. And then finally, 1.2% from fixed income sovereign, which is obviously the debt of non-U.S. Countries, 1.2% gain there. And again, so all five of those sub-strategy areas ahead of that of the Dow Jones decline of about 1.3% for the month of October.
All right, so let's zoom back and take a look year to date through October for the composite indices. What stands out to you?
Yeah, you can see your overall composite has gained about 7.5% for the overall for the year, the first 10 months of the year, I guess you could say. And that's about where the relative value is coming in. You can see that just a little bit below that, 7.3 or something to that effect. Overall U.S. equities, again, with the slight decline in October, and obviously here we are in the first week of November, we know there's been a very strong positive reaction to the U.S. election. But into October, you had those up about 10 and change, 10.8%, about 10% gain in the equity hedge, really the area of the industry that is the highest degree of correlation to the equity markets. So not surprising there, directional strategies. And again, event-driven is, from previous videos, event-driven is a strategy area that started off the year a little bit trailing other strategies, and then building into the end of the year, really kind of anticipating the election and expectations for 2025 are very strong for a greater, more business-friendly, less regulated environment. And I think that you're going to continue to see that area, strong performance out of that area through the end of the year and into the beginning of next year. And then lastly, you skip down to macro, which, as you know, also from previous videos, started out 2024 as the leading strategy area in the first 3 or 4 months of the year. And certainly as interest rates have become more volatile, some of the trend following quantitative strategies have underperformed. So it'll be interesting to see how those models have turned over in the first week in November, when we start to see November performance here in a couple of weeks.
Very good. So at the sub-strategy level, year to date, what are the top performing sub-strategies?
Interesting. These have not, they've not really turned over much. Obviously, with October being kind of a month that didn't really, was more of a waiting month and people positioning for this first week of November. But quantitative directional has been the leading area of performance, and you can see 19.1% in the first 10 months of the year, very strong there. And then technology, healthcare, fundamental growth, and multi-strategy, as you kind of go down the list of the top 5 sub-strategies in the first 10 months of the year, you can see all of those leading areas of performance heading into the election. And obviously, we know there's been a tremendous amount of excitement here in this first week in November. We'll see how that plays out over the next couple of weeks.
Well, and that brings our performance snapshot to an end. Thank you so much for your time. Any final words?
Yes, if you're watching this video, you probably know that we do regular performance update for the indices on YouTube, on our YouTube channel. So please subscribe to the channel. And if you have questions that you'd like us to address on future videos, happy to receive those questions. You can also send an email to me, Ken Hines, or whoever you work with at HFR, or you can send an email to Indices at HFR for any question area you'd like us to focus on a future call, or if you just want to set up a call to discuss anything that we've talked about in this video, and you'd like to get a greater understanding of that. We just launched a new website a couple of months ago, so please visit www.hfr.com. When you do get there, please be sure to download the investor guidebook. There's a lot of great information there on how institutions, with this sort of some of the use cases and utilities for all of our investable indices is there in the investor guidebook. And if you have any questions about that, feel free to reach out to me or anybody at HFR to arrange a call to discuss.
Thanks, Ken.
Thank you.